Today, the stock market actually rallied, at least a little bit, on bad news. This is a sign that maybe some of the peak fear that drove us 20% lower at the lows is maybe behind us. Now, let me share some of these headlines that sound like bad news, but the markets are not reacting to them, which is typically one of the first signs that a real bottom is actually in, when markets start to ignore bad news and move up anyways. Now, keep in mind, whether or not the real bottom is in is going to come down to what the economy does. It's going to come down to, are we going into a recession? Are we not? That's the simplest way that you can put this. I think Wall Street right now is assuming there's going to be deals done on tariffs. If there's not, then that's also a big problem, because we're already kind of pricing in these deals that will get done. In fact, the bad news today is bad news on these potential trade deals. Trump now plans to impose 21% tariffs on most tomatoes from Mexico. Trump said this on China. He said, interestingly, they just reneged on the big Boeing deal, saying they will not take possession of fully committed to aircrafts. So basically, they had orders and now they're canceling them. And Trump criticizes China for backing out of the Boeing deal. Trump says China was brutal to U.S. farmers, and he says the U.S. will protect farmers. Canada's Prime Minister Carney says President Trump is attacking our auto sector. And the Canadian Prime Minister says, quote, we can't provide guarantees for every situation. The EU expects U.S. tariffs to remain as discussions make little progress. Again, this is one of those headlines that you would have sold off on previously, but didn't seem like the markets cared too much about this today. Also reported today, Foxconn sent the highest amount ever of iPhones in a month, worth $1.3 billion from India to the US ahead of Trump tariffs. Bloomberg reports today that Donald Trump's 25% auto tariffs are a hefty blow to Japanese automakers, with struggling Nissan the most exposed. China's Customs Administration says we're holding meetings with trade businesses and industry associations. Now, Zelensky today says talks with the U.S. on mineral deals were positive, with more meetings to come. Mexico says that they will try dialogue about tomatoes. U.S. Department Treasury Secretary Falkender says, quote, I predict tariff negotiations will work out. And Canada will provide temporary 6-month relief from counter tariffs for goods imported from the U.S. that are used in manufacturing, processing, and food and beverage packaging. Also in the news today, the U.S. government's ability to manage its cash flow to pay its bills on time will run out sometime between mid-July and early October unless Congress lifts the debt ceiling, per a bipartisan policy center. Johnson & Johnson CEO says pharmaceutical tariffs can create disruptions in the supply chain, leading to shortages. M&I reports today that EU-China EV resolution hopes dim after U.S. threats. The European Union is likely to suspend its efforts to reach a resolution with China over its tariffs on electric vehicle imports, pending the outcome of ongoing EU-US tariff negotiations, the EU trade sources said. So this actually looks like Europe's leaning more towards the US on this one. It says here, quote, any kind of deal with China could be seen as ganging up on the US, one person familiar with the matter said. So it seems like they're leaning towards, being friendly to us. But again, that doesn't help the negotiations with China. Citigroup CFO says there's obviously a great deal of uncertainty around tariffs, deregulation, and tax policy, which is putting downward pressure on growth. But Bank of America's CEO had something positive to say today. He said the consumer keeps pushing money into the economy. So, that's a better headline to hear for sure. We did get export prices month over month today that came in at 0%. The forecast was positive 0.2%. Import prices month over month came in at negative 0.1% versus estimates of positive 0.1%. New York Empire State Manufacturing Index came in at negative 8.10. The estimate was negative 18. So little bit better than expected, but this thing is always negative and it's soft data. Keep that in mind. Tomorrow is the big day for markets. We get retail sales at 8:30 in the morning. You're expecting a really strong number, anywhere from 1.1% month over month to 1.3% positive month over month. So that's going to be very important. Why? Because it could, solidify whether or not Q1 GDP is going to be negative or positive. If you exclude gold in the alternative model forecast, which the Atlanta Fed GDP Now tracker does provide, you're coming in at negative 0.3%. Now, I don't know exactly how the GDP report is going to play out. They don't exactly exclude gold. So, including gold imports, you're negative 2.4%. Okay, so you're negative from that regard. But if retail sales come in good for March, that could really boost some of these numbers. Even if it's still negative, it may not be as negative. Now, if retail sales come in bad, then I think that really solidifies a negative Q1 GDP report. Yeah, sure, you're going to get other data that's going to come out, but retail sales is a huge component of the GDP report. So I think that will be very important coming out tomorrow. You do have the Bank of Canada interest rate decision and the policy report. That's probably not going to move markets too much. Again, we have our own data to worry about. Fed Jerome Powell speaks at 1:30 p.m. tomorrow as well. So what does Powell have to say about all of this? Is he, more concerned about inflation still? Is he concerned about the economy? Has Powell changed his stance at all? That's really what markets want to figure out from that speech tomorrow with Powell. So retail sales and Powell, that's really going to probably determine the rest of this week, right? I think it could cause a big move to the upside or a big move to the downside. You also, again, have some earnings today and after hours: United, Interactive Brokers, and JB Hunt. Wednesday pre-market: ASML, US Bancorp, Abbott, Progressive, Citizens Financial, and First Horizon Bank. Wednesday and after hours: Alcoa, Bank of Ozark, CSX, Kinder Morgan. And then Thursday, you have TSMC, Huntington, United Health Group, American Express, and Ally Bank. And then Thursday and after hours, you have Netflix and Lockheed Martin. Now, I think this is interesting because TSMC is usually not like a super important earnings, but right now with the uncertainty around growth and what AI CapEx is going to look like, TSMC is going to tell us a lot about potentially NVIDIA's earnings. And that is still a very large company, last I checked, and will have a large impact on our market. So TSMC, if they have a good or bad report, that's really going to determine how Thursday's trading evolves into Friday. The CNN Fear and Greed Index today is coming in at 20. This is much better than where we were a week ago when you were at 3. Okay, so, now it's at 21. You're almost out of extreme fear. Market momentum, extreme fear. Stock price strength, extreme fear. Stock price breadth, extreme fear. Put and call options, extreme fear. Market volatility is now only neutral as the VIX is now below 30. Safe haven demand in extreme fear and junk bond demand is now neutral. Percent of stocks trading above their 50-day moving average is up to about 19%, which is much better than where we were at the lows when 5% of stocks were trading above their 50-day moving average. But still, this is a weak level. Like, this is not a strong market by any means. Markets rising on bad news today could be suggestive of more strength in markets, investors being a little bit more confident to go out and buy stocks, but I think time will only tell there. Now, what is also going to be fascinating this week is the AI investor sentiment survey that will come out on Thursday. You still have very high level of bears, 58.9%, neutral investors at 12.5%, and bullish investors at 28.5%. Like, there's not a lot of neutral investors. People have chosen a side. Do the bears drop? because still above 50% is crazy high on a historical basis. The historical average is 31%. So you're literally still almost double that. And markets have started to, recover quite a bit from the lows, albeit we were only there briefly at about 481. The S&P is up about 12.3%. So it's been a stronger move than a lot of people even realize. But the bears continue to be, the dominant force in that AI investor sentiment survey. Now, Jamie Dimon, JP Morgan CEO, says, I am seeing very little stress at a consumer level. Jamie Dimon urges the U.S. to engage with China. And Jamie Dimon says deleveraging in treasuries may be somewhat over for now. This is interesting because, throughout this trade war, treasury yields have skyrocketed. And there was a lot of selling of bonds. This most likely was China, Japan, Canada, someone that owns a good amount of U.S. treasuries. Maybe it was some parts of Europe, something. And it was really starting to create a bit of a crisis. Even Fed officials like Fed Collins spoke about needing to potentially step in and stop that pain in the treasury market. You risk bankruptcies, you risk bank runs. You risk a financial crisis if treasuries continue to fall. And Jamie Dimon says that should be over at least for now, which for now, is that super comforting? Not really, but at least for now, he thinks it's over. Jamie Dimon says he does not think decoupling from China should be the objective. And Goldman Sachs says that stocks are due for a contrarian bounce in the next 3 months. Now, again, tomorrow, whether or not markets do well is really just going to come down to retail sales and Jerome Powell, as we mentioned earlier in this video, because of the potential impacts of what a recession could look like. If retail sales are bad tomorrow, you're going to have more worries about a recession. Now, based on what Jamie Dimon said today, you're probably going to see an okay number for retail sales. I don't know if it's going to be as strong as expectations, but it's probably going to be okay. Enough to subside some of those recession fears, and that could give markets more room to move higher. That's just a thought. That's obviously not a guarantee. Let me know your thoughts on all of this and what we have in store over the next couple of weeks, really couple of hours or couple of days, down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.